Hi everyone, happy podcast day. Me and Dana are back. Hope you had a wonderful week and happy Saturday morning. Some of you don't get the full weekend. Some of you work on Saturdays, and I do feel for you. Hearing the news about some of our, folks out there who work very hard and are really finding it tough. My heart goes out to you guys. Somehow mental health and exhaustion seems to be plaguing our youth, and I strongly advise you guys to remember it's just a job, whatever you do. There's more to life than your work. Remember that. I know being ambitious, what it means, earning money and feeling the pressures of loans and paying them back, everything. But at the end of the day, do realize all of this is just a job, not to get pulled away from living your life. Is something which I wanted to get out there because of hearing distressing news over the week of what's been happening to some of you. Aside from that, this Thursday, the Fed had cut the interest rates by 50 basis points, where the American interest rates now hovers somewhere between 4.75 and 5. And as expected, initially everyone cheered. Then I'm sure cheer kind of wore off because they don't understand. They first wanted 25 basis points, but Fed said, why take 25? Double it and give you 50. But that suddenly created anxiety. And what is this anxiety is what Dana's asking me. When you ask for 100 rupees and they give you 200, why are you crying? Why are you giving me 200? So
not crying. If it's a happy moment, then we can celebrate. Or this is a warning signal.
Correct. So everything, that is what anxiety does. And most people seem to be very anxious nowadays. So what do you have, Dana? Let's unpack this. What do you have?
Yeah, so today we are going to cover about gold related stocks and gold. So what was the impact that the 50 basis point created in the gold stocks in India particularly? And then what is the benefit that gold stocks can get after the rate cut? And what is the metrics to analyze the gold stocks fundamentally? That's another question. And then I was having the clarification of the gold stocks. We can classify by this method. Like gold mining and gold making and the exports, they are in one particular type. That fundamentals can be changed. And the gold lending company fundamentals can be changed. And the gold selling companies like jewelers are completely different. So these three are completely different. So that's my analysis about this gold stocks. So from my questions.
Okay, let's first talk about Fed. Everyone was expecting this Fed cut to come. When I'm saying everyone, the analysts in the US, they were feeling that 25 basis point is what they will give us and then do a 25 later on. But Fed went ahead and gave us a 50 basis point. Now, why there is some kind of happiness at the same time, some kind of fear is because of what this means. Currently, in the previous video I had spoken that there is usually a reason for Fed to cut interest rate is because of some impending economic catastrophe or natural catastrophe happening. So like the COVID lockdowns are rolling out, so that time they dropped the interest rates. So usually, or when the bank crisis happened in 2007, they cut interest rates. So this time the economy is doing well, inflation is under control, the job numbers could be better, but it's not bad. Things are looking okay in the US. The US economy is doing robust compared to the rest of the world. So there's no real motivation to cut the interest rate. So they said maybe they'll give bakshis of 25. But he went and dropped 50. So now the question begs, there's two parts to it. One, is he seeing more in the job data? Is there a recession going to come? Is there something which he's seeing that we are not seeing? Okay. That is first fear, right? You're sitting in the bus going very fast and everything looks nice. From the window, you're looking from the back of the bus through the side. The road and head is empty and you're like, suddenly the driver brakes.
Why?
Hey, thrown away. What happened? So that is the reaction which everyone's having. Why is there a sudden, acceleration or change in momentum? What is the reason for that? That analysis is happening. Second thing, what analysts are fearing is he's cut too fast. Okay, like how they complain he's raising interest rate too fast. One set was saying it was raising too fast. Another set was saying inflation is already bolted. The reaction is too late. Yeah. So the same group of guys now are saying he's cutting it too fast. Because he's cutting it so fast, inflation again will suddenly go back. Because credit cards will become cheap in the US. Home loan market is already very heated, meaning home prices are very high, right? People are wanting to buy homes. Now we'll see the interest rate drop and they'll all be eager to buy more homes, inflating home prices again. So this is going to rekindle inflation and push inflation up again. So that fear is all looming. So you're seeing happening. And if you saw Dow on the day, on Wednesday it was for them, Thursday for us, Thursday morning we saw it. As soon as it was not moving anywhere, the Dow, as soon as he announced it, it went up. Then as soon as he finished talking, tabak, it fell. It corrected. It went to an all-time high, broke record, and then it corrected. So the question now is, did market correct because people are seeing all-time high and booking profit? Or they were saying, okay, there is some problem, fundamental problem, like the inflation is going to come back, or the job market, it's too late. He's reacted too late and the data he's seeing is going to be actually far worse, and that is the reason. So there's kind of a mix. There is anxiety in the market, and this anxiety you can see in the dollar also. Usually when the Fed cuts interest rate, dollar weakens because that means there's more dollars available.
Okay.
Because people will borrow more.
Yes.
Fed is printing more currency. So that means there's going to be more dollars in the market. That means if there's more dollars, the dollar price will, against the rupee, will become weaker. And yeah. But it did not happen. The dollar actually kind of strengthened a little. So, and the gold in the US went up. At the same time in India, the gold went down. So if you noticed, we've been talking for the few weeks now. This is a very strange situation which we have not seen in the past. Right? We don't have a track record to sing because we're used to, if the dollar becomes strong, gold will become, price will go down. Right? And we talked about all these fundamental things being like gravity.
Yes.
Right? Moon will always go around the earth will always go around the sun is in the middle. Suddenly we're getting data points where it is questioning all this. So I understand this confusion.
Miracle.
Yes. So there is a bit of confusion. I do agree. And how this will all clear up doesn't matter. For the rest, the reason I'll tell you why it doesn't matter to us. Because all what you see is short term. If you are a trader who's buying to a share, right, or you're buying gold to ride, it's seeing that gold price is going to go up, you see an upside of 10%. So you're going to buy it now and then see the upside and sell it off at 10% in 6 months from now, 9 months from now. I'm not the channel for you.
Correct.
Right? I'm not the person you should be talking to because I do not believe in that. I'm the kind of guy who believes that if you buy, you're going to hold it for 5 years.
Minimum. That's minimum.
Yeah. So that is my philosophy. And if you believe in that philosophy, all this doesn't matter.
Correct.
Because these are temporary. Fed will raise interest rates, Fed will cut interest rate, And when markets react asymmetrically, it gives you opportunities to buy. Because, for example, on Wednesday, Japanese market followed the Fed rate because the Japanese interest, yen and dollar arbitrage was widening. So it corrected the Japanese market. Now, because the Fed cut its interest rate, Japan has raised interest rate, that arbitrage has become narrower. So again, Japanese market looks more and more attractive. So people are flooding to the Japanese market. And that day on Thursday morning, the Japanese market went up almost by 3%. And everyone said the Indian market will also shoot. If you saw, remember those Instagram reels you saw?
Yes, sir.
It didn't shoot. Initially, when they turned on the TV, when boost it went, then chamak, it fell down. And the stocks which we have been looking into consideration, those stocks are looking even more nice. Because they are still correcting. So I'm like, who cares? If you fundamentally know the business and it looks good and it's sound, go ahead, invest. And you have, different coffee range you're looking at. So there's no problem. Don't get paralyzed by this over analysis. Right? So you look at your consideration list. And if it's making sense, continue.
Okay, sir.
Okay. Now let's move on to these classifications of what you're talking about. How gold affects 3 branches of businesses in gold-related
stocks.
Yeah. So the first one which you wanted to talk on was gold mining.
Gold mining business.
Yeah.
Gold mining and making or exporting, this all comes under this.
Okay, I think we should take this as a Sunday video because this is already stretched. People would have had enough for a morning podcast. Me and Dana will shortly come back to you. For us, it's shortly. For you, it's in 24 hours. We'll come back to you with a Sunday video where we're going to break down the 3 pillars of gold, as they say, and we'll do a bit further analysis on how you should look at it in terms of investing. So enjoy your Saturday. Be safe out there. Do share and like this podcast, and do support Dana by following him on Instagram and liking him there and asking him your questions. And me and Dana will see you tomorrow morning with the remaining part of this video where we talk about gold further. Thank you.